Guys, I wish you all a very happy new year 2024. Now, this is almost confirmed that there will be either a correction or a recession. Correction means you can say a soft landing, and recession means the recession. So, guys, last week the picture was clear that the S&P 500 as well as the Dow Jones, they will not go bullish until and unless these indices they breach their previous high. Previous high was 4778. In the S&P 500, 4778, this was the previous high, and in the Dow Jones it was 37,641. So what we have seen that on Monday itself, after struggling initially, okay, in first 4 or 5 hours, the S&P 500 was able to breach the previous high. Whereas in case of the Dow Jones, it was only on Wednesday when the Dow Jones was able to breach its previous high, which is why if you were surprised that even though it has breached the previous high, why the S&P 500 is still not able to move up, it was because of the Dow Jones. And in my previous weekly S&P 500 technical analysis, I have cleared this condition that both indices, S&P 500 as well as Dow Jones, both must breach their previous high so that a more means a bullish movement or more bullish movement can come. Now there was, just like okay around here, there was also a very strong level, very strong resistance level, okay, and then we have seen that both of the indices they failed to give any more bullish movement. Rather, on Friday we have seen a bearish movement, then a reversal. But we knew that whatever the fall will be on Friday, this fall will be limited, this fall will be contained, this fall will not be more than what we are anticipating. And this was through these the daily updates to my Patreon community members. So even before the open of the market, we knew that if there comes any fall or any heavy fall, then also that fall will be contained, it will be limited. And then we have seen that a reversal and it closed. So anyway, so the previous week it was like this, but the picture might not be very much clear on the daily chart, which is why I will show you the same on the weekly chart. On the weekly chart, the picture is very much clear, and I will show you that how it is saturated and how it is heavily overbought. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis. The first point of the agenda is the S&P 500 technical analysis on the weekly chart. So here I am going to cover the S&P 500 as well as the Dow Jones. Because as of now, whatever is happening or whatever is about to happen or is going to happen in the entire US stock market will be heavily influenced by the Dow Jones. So that is why we need to analyze the Dow Jones on the weekly chart. Okay, so I will show you that how S&P 500 as well as Dow Jones are heavily saturated and heavily overbought on the weekly chart. The second point of the agenda is the S&P 500 technical analysis on the daily chart. So this is the daily chart. Okay, so I will show you that what is happening on the daily chart, if there is any change in the technicals or not. So daily chart is the short term picture, but the weekly chart is the long term picture, right? Then the last point of the agenda is the probable movement of the S&P 500 from January 2nd to January 5th. So just like what I have discussed last week also, okay, that this will be the scenario, then only this will happen or this will happen, okay. Similarly, a lot of things I am going to cover in this the last point of the agenda, that what will be the conditions for the fall, to what levels the fall can be seen, or what will be the conditions for the upward movement, bullish movement, and what will be the levels in the bullish side. So guys, this is the first point of the agenda, the S&P 500 technical analysis on the weekly chart, and this is the weekly chart. The weekly chart means that the one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. Now on this the weekly chart, if you notice, okay, at first this is the last candle. It's a small bullish candle. So 1, 2, 3, 4, 5, 6, 7, 8, 9. This was a ninth bullish candle in a row, right? And when we see the same, okay, here in case of the Dow Jones, again 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, the ninth bullish candle, right? However, if you look into the body of the candle in the S&P 500, it's a small, just a small bullish candle, very small. Whereas in case of the Dow Jones, the body is good and visible, indicating that there are still bullish sentiments. So bullish sentiments, but there is no confirmation on the gap up open or the gap down open. Okay. Now when we look into the technicals, but before that, the technicals, yes, the moving averages, okay, Chimoku and all, are bullish, and through these the other technicals, everything is bullish, right? Similarly, here in case of the Dow Jones, moving averages, Ichimoku, and all of the technicals, they are bullish. So this means that the S&P 500 and the Dow Jones, they are 100% bullish or absolute bullish. Then what's the problem? The problem is with the saturation. You can see the stochastic RSI is absolutely saturated. Okay, and as I mentioned last week and earlier many a times, if you have subscribed to my YouTube channel for last many weeks or months or so, that whenever the stochastic RSI it hits either 100 or 0, there comes a reversal. In this case, the stochastic RSI, okay, it is continuously, it is already saturated for last 2-3 weeks, okay, but it is very much, or it is heavily saturated in case of the Dow Jones, heavily, very heavy, okay. A single 100 in the bull side means a reversal. Here we have seen a I think 2, 3 or 4, okay, these the 100s, and still that is why I'm saying it is trading at the 2005 and 2006 levels, okay. Means whatever was there before the 2008, the heavy recession, it was not 2005 or 6, maybe 2007, okay. Before this, that the great recession, okay, when everything was exceptionally good, everything was just moving forward, okay, that was the time, the long term bullish trend, okay. In that case we have seen, but in that case also we have seen a very heavy correction, okay, after this case of when this particular case was seen, okay. So now so we can say, or we can see that the S&P 500 is saturated and overbought, but the Dow Jones is clearly heavily saturated and heavily overbought, and it is still sustaining. That is why I mentioned that whatever, okay, this the heavy bearish candle you have seen, this heavy bearish candle has engulfed 3 or 4 candles. This will happen again this will happen, okay, of the similar intensity, that one candle will be able to engulf 3 or 4 candles, okay, because as of now these indices, particularly the Dow Jones, is heavily saturated and heavily overbought, okay. So that's the problem here. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel, and for the daily updates and the daily analysis of the S&P 500, you can join my Patreon community. And guys, I have this the program, that is the stock market knowledge transfer program, or the S&P 500 knowledge transfer program. Through this program, I teach the movement, hacks, strategies, technicals, trend analysis, manipulation, predictions, and much more. And this is my email address, and this is the spreadsheet where the details are there. And in the spreadsheet you can see that all of the details, what is going to be covered in this the program, everything is there in this the spreadsheet. And all of these the things, intraday hacks, short term hack, long term hack, and this is my email address, these are the terms and conditions, and these are the snapshots of the recent meetings, okay, the other people who have joined, who have participated in this the program. So guys, again, this is my email address. Whenever you want to participate, then you can simply drop me an email, or if you have any question, then also, okay, you can simply drop me an email, and I've given the link to this program in the description of the video and also in the comment section. Now guys, I'm going to discuss the second point of the agenda of this S&P 500 weekly technical analysis. And the second point of the agenda is the S&P 500 technical analysis on the daily chart. This is the daily chart. Let me write it down. D as in daily chart. Daily chart means that the one candle represents one day. Okay, not 1 week or 1 hour. Now again on the daily chart, when you notice, these the moving averages, Ichimoku cloud, okay, Bollinger Bands, okay, everything looks bullish. But now the picture has changed through the other technicals. If you notice, the MACD has given a confirmed bearish crossover after first week of December. Okay, but we have seen that even in the first week of December there was a confirmed crossover in the MACD, and still we have seen a continuation of the bullish trend. Okay, after the FOMC, and then it moved up and the MACD changed. But the thing is that whenever there comes this the change in the MACD and the MACD goes bearish, and if it is supported by the stochastic RSI, if you look into the stochastic RSI, bearish. So whenever MACD and the stochastic RSI both are in the same direction, either bearish, okay, or bullish, in that case most likely the movement of the index, okay, it will be in that particular direction. If it is like this, then the index will move like this. If it is like this, then the index will move like this. So although this combination, okay, it kind of almost it confirms that this is going to happen, but the only case when this might not work will be the moving averages. This means that unless the index, okay, it gives up the moving averages or it shows the weakness through the moving averages, we cannot expect a heavy fall, okay, or in this case, or a heavy bullish movement in this case, right? Anyways, what we know is that as of now, okay, this is the picture, and now the S&P 500 is not 100% bullish. The S&P 500 is now 50% bullish, means 50-50. Simple, 50-50. Okay, or we can say it is simply neutral, right? As but the this the other point is that the although it is 50-50 or neutral, it is still saturated and overbought. Saturated and overbought. Okay. Now let's see what is happening in the Dow Jones. Dow Jones, the same thing, bullish, 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 and yes, the same thing. Okay, MACD has given a bearish crossover. Last time, what we have seen is that the S&P 500 gave a bearish, means we have seen a MACD. This is the bearish MACD. Okay, in case of the S&P 500, but there was no bearish MACD or no bearish change in the MACD of the Dow Jones. It was continuously bullish from 1st of November. It is bullish, bullish and bullish. This is the first time after 1st of November, means after 2 months, this is the first time the Dow Jones has given a bearish MACD, right? This means that now this is of some importance. This means that if there comes just one or two candles, weak candles, and the MACD goes clearly bearish, in that case it will pull down the S&P 500, okay, and it will force the S&P 500 to give some reversal. I'm not saying heavy reversal, but some reversal. Okay. Other than that, the Dow Jones is heavily overbought and heavily saturated. Okay. This is the picture there. So now when this is going to happen, yes, there is one more thing. The stochastic RSI in case of the Dow Jones, it is still bullish. It was bearish, then because of these 1-2 bullish candles, okay, it has changed from bearish to bullish, and we can see it is bullish. So even though the S&P 500, MACD and the stochastic RSI both are bearish, but the Dow Jones, this combination is still not there. This means that we need one small candle or one bearish candle so that the stochastic RSI can align, or it may align, okay, with this the bearish MACD. Once the stochastic RSI is bearish, MACD is bearish in the Dow Jones, at the same time the stochastic RSI is bearish and the MACD is bearish in the S&P 500, Dow Jones and S&P 500. This means that now we can expect more or heavy weakness in the entire US stock market. Anyways, whenever that will happen, okay, I will update you through these the daily updates if you are my Patreon community member, right? And guys, it's not just about these are daily updates that I give to my Patreon community members. I also give these the stock market opportunities to my Patreon community members in the premium stocks of the US stock market, in the premium 30 or 40 stocks, top 30-40 companies of the US stock market, minimum 5 to 10 every week. So whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page, this is my Patreon profile. And on my Patreon page, you will notice that there are these the two tiers, and the only difference between these the tiers is the geographical location. So when you subscribe to either of these tiers or either of these levels, then you will get the daily S&P 500 analysis updates and the probable movement every day, as well as the stock market opportunities minimum 5 to 10 every week. And guys, if you notice that many people have joined my Patreon community for last many weeks, months, okay, more than a year, and they are getting these daily updates, daily analysis of the S&P 500 from Monday through Friday, as well as the stock market opportunities in the premium stocks of the US stock market. So whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. And here I will do the probable movement, and here I will give you the probable movement of the S&P 500, Dow Jones and the entire US stock market for the coming week. That will be from January 2nd, which is Tuesday, to January 5th, that will be Friday. Okay. So before that, you need to understand that the next week the jobs opening data that will be there. Okay, but the most important part is the FOMC minutes of the meetings, and I think it will be published on Wednesday, on January 3rd. Okay, so when the FOMC minutes of the meetings will be published, I will analyze and I will update you, means to my Patreon community members. Okay, that what is the summary of the FOMC, whether it is bullish or bearish. And yes, there is one more thing, that this time the projections will not be there. Last time the projections were there, and because of those projections we have seen, heavy bullish movement, and then the Federal Reserve Chairman himself has supported the stock market openly, so we have seen bullish movement. Okay, this time the projections will not be there, just the minutes of the meeting. Okay, that what the Feds were thinking. And if you have watched this, the previous S&P 500 weekly technical analysis, okay, so there I've clearly mentioned the economic factors, that the Wall Street is anticipating the first rate cut in March 2024, and thereafter rate cuts in each and every meeting. Okay, and this particular scenario is where we are anticipating the Great Recession, not a recession but the Great Recession, because back to back rate cuts, or the rate cuts from March, Federal Reserve Chairman and the FOMC members, they have that they have themselves, okay, they have mentioned that the first rate cut can be anticipated in June 2024, but the Wall Street is anticipating March 2024, and this is the reason for this the big rally, right? So the rate cuts will come, or generally the rate cuts, okay, they come only when the economic situation deteriorates, means when the economy goes down, nosedive. That is the time when the Feds they act and they go for the rate cuts. So the rate cuts generally, okay, happen when the situation is bad, or is going to be bad, or very very bad. Then only the rate cuts will be there to support the economy. Okay, so the market is anticipating March, and then subsequent. This means that the Wall Street is anticipating the Great Recession. However, this is just an anticipation. This is just a speculation. Okay, no one knows whether it will be a Great Recession or a recession. But yes, one thing is confirmed: a correction will be there. Correction means 20%, minimum 20% fall in the stock market. That is the correction. Correction means soft landing. Everyone is talking about that. The best case scenario is the soft landing. Soft landing means correction 20%. Anyway, so I will make okay, another video particularly on this part, and I will give you these the levels where we can anticipate in the bull side and in the bear side. Yes, FOMC, these things. Okay, some economic data. This means that next week, yes, the market is expected to give some movement. But now what we know is that because the Dow Jones is already trading at its all-time high levels, it has breached okay, its previous all-time high. It has formed a new all-time high. Okay, and all. But now in case of the S&P 500, the all-time high of the S&P 500 was 4818. Okay, and we have seen that the S&P 500, it failed to clear 4800 even. So now whether the S&P 500 will be able to hit breach and will be able to form a new all-time high or not, okay, this will be subjective and this will be conditional. Okay, and in the next week, if there will be any chances of seeing this thing, then I will update you to my Patreon community members through the daily updates. Okay, but what we know is that as of now the maximum allowed movement is 4818 in the S&P 500 in the bull side. Okay, only if it breaches 4818, then only some more levels will come. Now in the bearish side, so what we know is that in case of the S&P 500, MACD is bearish, stochastic RSI is bearish, perfect combination. In case of the Dow Jones, the MACD is bearish, and this is seen after 2 months. Stochastic RSI is not bearish. Now if the stochastic RSI goes bearish, Monday is holidays, Tuesday or Wednesday, whenever it goes bearish, then this combination plus this combination, okay, this will put a heavy downward pressure, an extremely heavy downward pressure on the entire US stock market. Okay, doesn't matter now whether it will be Dow Jones and Nasdaq, S&P 500, no, it will be everywhere. And this heavy pressure will then force all of the entire US stock market to give a reversal. Now this reversal may be like sequential, or you may see just one candle, one heavy candle which has engulfed the previous 4 5 candles. Simple. Okay, and yes, this can happen. Why this can happen? Because the Dow Jones is heavily overbought and heavily saturated. Okay, whereas the S&P 500 is only saturated and overbought. Okay, so yes, so a heavy candle, a very heavy candle which can engulf 3, 4, or 5 candle, means intraday you can expect up to 3% fall intraday. Okay, means 100 or more than 100 points in the S&P 500 from top to, from high to low intraday. Okay, so that can still happen. So this condition is clear. So whether this is going to happen on Tuesday or Wednesday, or if it can be avoided, so I will keep you posted through these the daily updates. Okay, so I think, so I hope this point is clear. Now as of now, this is the only and the only condition, okay, which can force the S&P 500 and the Dow Jones to come down. Okay, now what will be there in this, the bull side? The bull side as of now, the problem is that in the bull side, the as Dow Jones on the weekly chart and on the daily chart, it is heavily overbought, heavily saturated, not seen in last 15-16 years. Okay, so as of now there is no guarantee that to how long it can sustain, because it is already beyond, it is trading beyond its levels it was not supposed to be. This means that it must cool down before it can move up. So as of now we do not know exactly to how, means to what levels the Dow Jones can come, it can move up because of this heavily overbought and heavily saturated condition. Okay, because see, there was an early, generally what we see is that historically, whatever happens on the last trading day of the year, whatever happens on the last trading day of the year, okay, it shows the intentions, okay, or the movement or the momentum which we are about to see in the first week of the year. Okay, last day of the year was red. Okay, you can clearly see it was red, weakness. Okay, so this means that if we consider the historical movement, okay, and whatever happened, okay, earlier, this means that the first week of the 2024, it should be weak. If not red, it should be weak with just some up down like this. Okay, otherwise it should go red. Okay, but this is based on the historical movement, it has no technical relevance. Okay, so upward movement in case of the S&P 500 we know, and in case of the Dow Jones, okay, this is not known that to what levels. If it want to move up, it can move up, but it will. So whenever it goes and it moves up, even an addition of 0.1 point, okay, it will make it, or it will add more weight, and something very very similar to, or much we can say much more heavier than this can again be seen, because the Dow Jones will not be able to handle its own weight, and it is very very heavy, extremely heavy. And when the Dow Jones goes down, then everything will okay, it will go down. Now in the bearish side, what we know is that the S&P 500 is not going bearish until and unless it breaches the low of the candle. Low of the candle was 4, 6, 9, 8. Okay, so in order to go bearish, or in order to give more bearish movement, the S&P 500 must give up 4, 6, 9, 8. Generally, okay, so here I am talking about a breach, but generally we consider the closing, only the closing. Okay, once there comes a closing, confirmed closing below 4698, this means that more fall can be anticipated. Okay, at least if you have if you remember 452737, okay, it was the zone. Okay, a fall means this will be not 1 or 2 days fall, okay, but it will take some time, but eventually it will be heading to 452737. Okay, and that is the point where it is, and this is where it will be getting the good support or the heavy support. Okay, so that is there. This means that even if the S&P 500 comes down and it managed to sustain above the 4698, and it managed to give up a closing above 4698, so again we need to wait. Okay, that if the next day if it goes the closing, if not, then it will be moving above. Okay, it will then it will be going bullish, as simple as that. Okay, this is the reversal that will be there, right? So this is how it works. Then again in the bull side, okay, it has to breach this high. So this means that it will keep on trading between these two levels, as simple as that. Okay, but again do not forget that the stochastic RSI, MACD is bearish, fine, stochastic RSI, because once the stochastic RSI goes bearish, in that case there will be less chances okay, in this the bull side there will be more chances in the bearish side. Okay, or we can expect a breach and a closing below this level and more this the fall. Okay, and that will be known only through the Dow Jones or the stochastic RSI of the Dow Jones. This will be avoided okay, if the MACD, if there comes again a heavy bullish movement somehow. I do not know exactly what can trigger this. Okay, it is already very heavy and extremely overbought, but if there comes heavy bullish movement, and if this bullish movement help the Dow Jones, means the MACD to, or it force the MACD to go from bearish to bullish, to change the direction, in that case stochastic RSI is bullish, MACD is bullish, and in that case the S&P 500, okay, it will also turn slowly bullish. In that case there will not be any more or not anymore, there will not be a heavy bearish movement. Whatever the fall will be there, it will be limited. Okay, rather we will be anticipating more bullish movement, okay, in this particular the bull side. Okay, so this is very very simple here. And if you have any questions that you want to ask, then please feel free to ask your questions through the comment section. And so guys, this was my S&P 500 weekly technical analysis for the next week, which is from January 2nd, okay, that is Tuesday, to January 5th, that will be Friday.